Hi Ron, it's Stuart here again. Hope you are well. We are on Wednesday, so there's today and tomorrow before the shortened week kicks in on Friday. Good Friday, remember, for Christians across the world, Orthodox or Western Catholic Christians, Anglican Christians. Call them what you will, or call us what you will. On Friday, a significant holiday, particularly for my Orthodox friends. So. Things may cool down in the next couple of days, but who knows? Will it stop Trump sending out on his Truth social media or whatever his media platform's concerned? It's the main mover of markets at the moment. So we got the Canadian central bank decision in a little over 10 minutes. Dollar CAD here on the charts for us. Dollar being weakening over the last week or so, quite significantly here. We had a rally, a bit of a rally yesterday, so we've got a bit of a candle formation here at the low. Is it the low, or is it just another bounce and then we're going to go lower? Who knows? We were short this earlier in April. We're currently trading at 139.25. We've had a little lift for the dollar after the better than expected retail sales data an hour or so ago. Let me find today. Where are we? It's Wednesday, middle of the week, Wednesday, the 16th of April. Let's go through the rest of the data that was we've seen this morning. Better GDP numbers out of China. The China data dump this morning was really quite impressive, to be honest. 4.5% for the year-on-year growth. Quarterly was a bit weaker. Obviously, the 2nd of April issues haven't yet kicked in. The tariff meltdown hasn't yet kicked in for some of this backward-looking data, but still, China still growing healthy. It's obviously under its historical strong growth rates, but we remain remain very much at loggerheads, Beijing and Washington at the moment. Some chatter overnight. I'll come on to that in a minute, that or a bit more later on. But some chatter that the Chinese may be trying to come to the table. Their chief negotiator has been moved sideways, so there may be some movement. But at the moment, nothing really between US and China. Nobody's backing down. It's real toe-to-toe, nose-to-nose. Currently, but let's see what happens. Yeah, obviously yesterday we had that big announcement from Nvidia regarding the chips. Chatter on the Reuters feed this morning as well that Nvidia had not disclosed to some of its key Chinese customers about the licensing agreement or licensing requirement the US government's now put on export of Nvidia chips to China, which is obviously going to cost billions. They're talking about Nvidia that is looking at production in the United States over the next few years. So again, $500 billion investment there, sort of news that Trump will relish, no doubt. It's very positive news if it all comes to fruition. Of course, there's announcements and then there's actually what actually happens. So, but this clash between the world's two biggest economies is still unnerving markets and still remains very much in play. But I say a nice strong set of Chinese data. Obviously, all Chinese data I personally take with a bit of a caveat. But anyway, we'll see. Weakening inflation in the UK as well this morning. Core CPI lower than expected. Headline coming in here at 2.6% from 2.8%. Month on month, 0.3 of 1% for March from 0.4 in February. So RPI, the retail price index, also under 3% at 2.8%. So although it doesn't feel it for most Brits, most working Brits, most families, most businesses, prices are prices are still going up. They're not going up quite as much as it was a few months ago. But 2.6% is the headline number that the news outlets will be talking about tonight on the main evening news in the UK. Coming down to Europe, that's in line at 2.4%. The core reading for CPI, the headline at 2.2% for the Europe area. Again, a tad lower than expected, or in line with expectations, but a tad lower than previous months. Again, in line with market expectation. Not really moved markets much. Those two CPI readings this morning. And an hour ago, or a couple of hours ago, we had the retail sales data, much better than expected. Certainly the core number 0.5 of 1%. Last month was also upgraded to more, almost double, from 0.3 to 0.7 of 1%. Obviously, a lot of that is retailers pre-running or front-running the impact of the tariffs, particularly on new cars and second-hand cars, particularly autos, quite strong. So the monthly headline number came in at 1.4% compared to 0.2 of 1% last month, and 1.3. 1.3% was expected to come in. I say it's coming at 1.4%. Again, a lot of that is to do with new and second-hand car sales in the retail sales numbers. You can see here, autos was still strong at 0.8 of 1%, but obviously not that 1.4%. So dollars bounced a wee bit, but nothing to get excited about, to be honest. If you short this on an end of day basis, dollar CAD, for instance, should we make the chart a bit bigger? Let me put me down here. There we are. Dollar CAD here, this week has been down to 138.30. So we bounced yesterday, but we remain under this key. This orange line here is the 200-day moving average. So that's our big line in the sand that now sits at the hugely, well, always has been hugely psychological 140 level for dollar CAD. So we've had a rise yesterday. We're cooling a bit today. If we just bring this down to the 5-minute time frame, see how we're responding ahead of the CAD here. Daily traders this morning is our higher lows. We got million trend lines, eh? We've got higher highs as well here. We've got a bit of a widening wedge going up to the again, although this is only a 5-minute time frame, that's the 200 period moving average here on the 5-minute time frame. So we've peaked so far at 138.30 again today. That's interesting. Or I'm saying again, not today, but this immediate hour ahead of the Bank of Canada. No changes expected from the Bank of Canada. As you can see, we've been dollars been cooling against the loonie here from this 139.70 area here on the 15th, yesterday's high here. A little bit of a double top. A small double top, but we continue to decline, and then into this area we'd had as a stop loss area. I think we shorted out last time we used it. Let's move that line out of the way. So this morning, the low today is 139 itself. I'm surprised I haven't got that mark, but 139 is our low today. 139.05. Accurate, but 5 pips within 139. We call it 139, and that's our widening wedge. So supported here, resistance up to the top here. We're over the 20 and the 50 moving average here on the 5-minute time frame. So it's looking relatively positive. No expectations from the Bank of Canada. Let's see what the statement says. Rates will remain the same at 2.75%. We'll see what if there's any detail in the statement. Obviously, the political side of things in Canada. We still have an election in a little over 2 weeks. 28th of, I think it's the 28th or 26th. It's the 28th. Yeah, 28th of April is the Canadian prime ministerial election that Mark Carney's called to give him a mandate. So the Liberal Party look like they'll retain power at the moment, but anything could change in 2 weeks. It's a long time, isn't it? In politics. But I returned Labour, a Liberal agenda maybe on the cards. He's talking up. Resisting Trump quite aggressively, talking with creating a wider coalition with the Europeans potentially and other agencies. So again, it'll all come out in a wash. But at the moment, as far as the Canadian dollar is concerned, it's sort of we're trading at 139.20 with 139 our big support today here, and there's the numbers come out. So it's obviously perhaps more bullish for the loonie as the dollar CAD moves immediately under the key new low of the day. We break 139 on the announcement from the Central Bank of Canada. Let's have a look at what that is saying. It's just coming across my terminal now, and let me just try and try and skim read this for you as I sort of scan it down here. So nothing changed. 2.75%, deposit rate 2.7, bank rate 3%. A major shift in direction of US trade policy and the unpredictability. There we go. Unpredictable, not chaos, but the unpredictability of tariffs have increased uncertainty, diminished prospects for economic growth, and raised inflation expectations. There we go. Bang. Pervasive uncertainty makes it unusually challenging to project GDP growth and inflation in Canada and globally. Instead, the April monetary policy presents two scenarios that explore the different paths for US trade policy. In the first scenario, uncertainty is high, but tariffs are limited in scope. Canada growth weakens temporarily, and inflation remains around the 2% target. So we are going down. I remember we had that big move down for Canadian inflation this week. In the second scenario, a protracted trade war causes Canada's economy to fall into recession this year, and inflation rises temporarily. So again, this idea that inflation isn't hanging around, and they've shaken it out of the system yet again. Temporarily over 3% next year. Sorry, I'm just trying to read that. It's dropped off my terminal as it's scrolling through here. Many of the trade policy scenarios are possible. There's also an unusual degree of uncertainty about the economic outcome within the scenario, since the magnitude and speed of the shift in US trade is unprecedented. The magnitude and speed of the shift in US trade policy is unprecedented, and absolutely, with a president like Mr. Trump, President Trump in place, that's just adding to quite a hawkish statement. Hence the rise in the Canadian dollar and the weakening a weakening of the US dollar in particular. So it'll be interesting to see how the dollar itself has reacted to that outside of the Canadian crosses. CAD 138.87 to its low of the day. Is it the low of the day? Yeah, that was yesterday's low was down here at that 138.50 zone. So we're at 138.88 at the moment. Not a particular, where we've spiked, not a particular pivot point or turning point or particular zone area. Some crosses here on this 5-minute time frame, but certainly dollar weakened on the Canadian announcement. Let's have a look, see how the Aussies. So see here again. This is a 5-minute chart on the Australian Aussie dollar up. So dollar weakening on that against the Swissy, which has been really strong. It's less of a move. Sterling, obviously less of a move, but still sterling up, and Kiwi and Euro up. So the Bank of Canada statement has there's no other US data out at this 13:45 juncture, this time. Sorry, 12:45 is GMT. It's no, sorry, this is GMT here. Sorry. So there's nothing else coming out of this. It's all to do with the Canadian statement. So there's no other data. So the dollar's weakening on that very hawkish comments from the Bank of Canada. I've just got the extended statement here. The economy is slowing as tariff announcements and certainly pull down consumer and business confidence. Financial markets have been roiled by serial tariff announcements, postponements, and continued threats of escalation. It's really quite pointed language for a central bank here. Global economies were solid in 24, but this has now been hit by tariffs and uncertainty, weakened the outlook. United States economy showing signs of slowing and rising policy uncertainty. Policy uncertainty phrase, the two-word phrase here, is repeated a number of times throughout the statement here. It's quite hawkish. In Canada, the inflation was 2.3 in March. It's come down. It's bounced up from the 1.8% in February. CPI is expected to move higher, but only temporarily. The Governing Council will continue to assess the timing and strength of both the downward pressures on inflation from a weaker economy and the upward pressures on inflation from higher costs. Lower growth, higher inflation. This is what the central banks are sort of somewhat agreeing on because of the uncertainty around the tariffs that's impacting everybody. Obviously, Canadians, geographically neighbours of the US, close trading allies for many, many years. All of that has been turned on its head, at least for the next 4 years. This means we will support economic growth while ensuring that inflation remains under control. We'll proceed carefully with particular attention to the risks and uncertainties facing the Canadian economy. These include the extent to which higher tariffs reduce demand for Canadian exports, how much of this spills over into business investment, employment, and household spending, how much more quickly monetary policy cannot resolve trade uncertainty or offset the impact of a trade war. There you go, they've said it, trade war. What it can do and must do is maintain price stability for Canadians. So there we go. Very, very hawkish statements out of the Bank of Canada there, my friends, pulling no punches in their assessment of the impact of tariffs on the Canadian economy and the outlook for inflation and growth in Canada. Dollar can might bounce back a bit. If not, no, indeed, it has not. 138.85 is where we've gone down to in this first 10 minutes. First 5 minutes of the break of the news. So no change in the statement. Rates in Canada. They remain at 2.7%. The bank rate at 3%, and the deposit rate 2.7%. So the key overnight rate remains at 2.75%, but still that's quite aggressive. Very competitive compared to other parts of the world. I don't, can you see here that the forex rate put this little rate up? You can see Canadians down at businesses or banks paying 2.7 on their overnight rate, 4.5% and 4.5 in. Excuse me. Don't know where that came from. It is quite windy and unsettled here in the UK, and I've been out this morning, but I wasn't expecting that, so excuse me. 4.5% in the UK and 4.5% in the United States. So for the Canadians in particular as well, the Bank of Canada, they're not scared of moving rates. They've surprise markets in the past, but that's for a central bank. That's a very, very hawkish statement, and no punches being pulled there. We have actually got a press conference. That'll be even more interesting than usual in 45 minutes. Don't worry, I'm not going to hang around till 3:30 for that. But I'll be lending more of an ear to that than I would normally on the announcement of a no rate change, because that's basically what's happened. Very hawkish statement. Obviously puts not pressure, but it makes even more interesting reading what Chair Powell is going to say at 6:30 today, later on. So 18:30 London time. Chair Powell has a speech from Chicago, the home of the futures market, the home of the options market, about economic policy. So whether he's going to, keep talking about the, cautious optimism, data dependent, he clearly won't get drawn into politics, and I wouldn't have thought he's avoided it ever since. Is he going to maintain, the cautious optimism about the US economy? Or is he going to, highlight the issues about the worries about rising inflation and the impact that's had on growth? So far, the jobs market is still holding quite resiliently. The sentiment numbers, sentiment feelings, the sentiment readings are all pretty dire. But is that going to feed through to the hard data? It's difficult to tell. I mean, today's retail sales, you can't call that weak, but it's been impacted obviously clearly by the tariffs, one would assume or guess, simply because of the front running of the tariffs, that's positive. But as far when we look back at the data, when in 5 years time, the retail sales number for April 2025 was better than expected on the back of the tariff announcements earlier on in the year by the president. So, but where this goes, who knows? It's really down to policy shifts, and that's what's roiling markets as well. It's just not inconsistency in the announcements, the big tariffs, pulling them back. You've got a month delayed, you got 90 days delayed. No, you haven't. Yes, you have. They're going up and up against the major adversaries, which is the Chinese, and yeah, it's uncertainty, but uncertainty creates opportunity because we have volatility, and as traders, that's what we want. Dollars come back a wee bit there, but in this 5-minute chart. But if we go up the scales, the hourly chart still looks pretty dire for dollar against the CAD, coming back into this 130, 138.50 zone, and 138.60 where this line is now. And the daily chart still remains pretty weak as well. So we had a up day yesterday. See where we finish today. Are we going to go back to test this low? Is this going to be the current selling crescendo low here at 138.60 for dollar CAD? But certainly under a 200-day moving average is always quite bearish. You can see here we were under it, tested it, under it, and then we got back up. So we've just breached this long-term 200-day moving average, and we're now into our fifth day under that key level, and that's now sitting at this hugely psychological 140 for dollar CAD. If we take that up to the weekly, see what I mean by 140 being a key psychological area. There's the 140 level, and a massive down week last week, taking this through the 50-week moving average as well for the first time in a long time. So the low here in the summer took us to 130, under 135. Are we heading down there again? We'll see, but that's very much a downtrend on the daily time frame. So we may see some uptick in the dollar if Powell continues this cautious optimism, which he's probably likely to, given there is a holiday on Friday. We're in the teeth, or we're getting into the teeth of the earnings season as well. But again, none of the real earnings numbers will be tariff impacted yet. It's what the companies are saying for what future prospects are looking like, with the uncertainty about what the tariffs are going to look like, how long they're going to be in place, are they going to be as strict as they are they, how long they're going to last for, is it a permanent thing, what do we have to do to change it? It's very difficult. I mean, there was a key the key European EU negotiator was in Washington. I think it was Monday and yesterday. Yeah, it's only Wednesday. Yeah, it's Tuesday, wasn't it? And it was clear that some of his comments, or some comments I was reading overnight, that he doesn't quite know what the Americans want to bring any sort of negotiation. It seems. Again, my interpretation of what he was saying, how it was reported, was that this is it. This is done. Yes, there's been a 90-day stall, but we're not rushing to change things. It's up to you to come to us. Europeans went there, but very little progress in negotiation, or what's been viewed publicly anyway. But after China, I think the EU is public enemy number one in the United States. So particularly around the non-tariff issues about like VAT and the regulations that the Americans find so infuriating when they're dealing with the EU. But it's a huge trading bloc. It's a very affluent trading bloc still, even with all its woes at the moment, particularly in places like Eastern Germany. But yeah, so it's a very, very different world with Trump in the White House and pursuing this agenda that he is at the moment. Anyway, as far as trading is concerned, what's going on? Well, that Bank of Canada announcement hasn't changed the tilt on dollar CAD. We're still down, and in fact, if anything, we're at the lows of the day, aren't we? Again, so although we've got that 5-minute chart, we saw the bounce off. We're back down to where we were. So dollar remains under pressure. Let's quickly run through the other majors. Aussie 63.75 at the moment. So it's the hourly. Sorry, it's a 5-minute chart. Let's go back to the 4-hour chart. So the trend upwards continues. We're struggling at this previous high. There's that intraday high, or that spike there at 63.88. We haven't quite got there yet, but Aussie remains bid here, 4-hourly. The daily similarly uptrend. Very, very strong uptrend V shape, which is always quite aggressive. But the line in the sand for the Aussie is this 64.64 level. So we just need to break that one before we get to 64 and then see what happens from there. But lots of targets will be around that level. Lots of positions getting closed as we get towards 64, but the trend is still set. You know, it's a very big, sharp sell-off, peaky down, and off we come. And peaky back up. Aussie up, and again that's the same across the. We've looked at CAD, Swissy benefiting more than most. Again, new daily, new 10, 15-year lows for the dollar against the Swiss franc at 81.40. Doesn't seem to want to go below that for the last 4 days. So is the selling finished? Far too early to sell. I would say, as far as the day is concerned, we key now what Powell says later on. But Swiss franc at .8140, yen 142.40 at the moment. Again, daily time frame, we're down again today. We had a bit of an up day yesterday, but the trend remains to the downside. Our 20-day moving average on the dollar yen 146.50 now. Try not to catch a falling knife, my friends. We are moving 142.40. If we look to the left, where do we go? Well, the peak low here, the lower the lows before we turned around was September, and we went to 140 itself. So 140 is next big target to the downside for the bears. The bulls, as I say, needs a big reaction to take us back over the 20-day moving average at 146.50. So dollar yen remains very much to the downside. Kiwi, like the Aussie, benefiting, obviously getting hit by the impact on the announcements on China, but recovering really strongly. And that's the trade we've still got open. We've still got a full position open on that. I nearly closed this off yesterday. I was looking at this on the weekly, but the break and hold of the 200-day moving average yesterday was key. Remember in moving averages, guys, the higher the number, the more significant the resistance and the support is. So a 200-day moving average is like 4 times thicker. If you think of it as a wall to get through, if you're trying to go up, 4 times thicker than a 50-day moving average, and 10 times thicker than my everyday 20-day moving average. So the 200-day moving average takes some energy and momentum to get through, and that's what happened yesterday for the Kiwi. We did spike as high as 58.42 yesterday, but the close through the 200-day was quite strong, and I was quite happy with that as we went to this key 59 level, dot 59. And as I say, you see the purple line here, 59. We were last here back at which was proving again resistance to the bounce in the downtrend here back in November. So September we were as high as 63. So that's still set. Our stop loss is here on this, so this still remains live, and that's still a live open trade with a full position, 2 half of positions from earlier last week's, the 10th and the 11th and the 10th Thursday and Friday last week. So we're nicely in the money on our long Kiwi position. We initially got in down here on Thursday at 57.35, and here we are at 59.20, very much in the pips. Thanks very much for that. Euro 113.80 today. Again, you can see a rally, not correction, but a consolidation, and some big positive green candles here. The 3rd, the 10th, and Friday as well. So Thursday, Friday was the big move up for the euro. We went to 114.80 on Friday. We've cooled a bit since then, but a strong update again today from a down day yesterday. So again, we hold the trend to the upside. We got reversed out on our long from the was it? I think it's the 9th we actually got in, wasn't it? Yeah, Was it the 9th or the 10th? I can't remember. Anyway, we were positive on the euro trade, and that remains positive. The 20-day moving all the way down there at 110.25 for the euro. So the story, as you can see, continues weaker dollar. I say Trump might change it completely, obviously, but that he'd like to see. He obviously talks up a stronger dollar, but a weaker dollar is helpful for his sorry, a stronger dollar is really what he wants, but the dollar's weakened on this uncertainty and the impact of the tariffs. 132 as far as cable's concerned. The yield, which they're very much focused on, is Scott Bessent, the Treasury Secretary, very, very much focused on that 10-year yield. Got it under 4%, and now we're back. This morning I was looking, it was 4.3%. It's quite a significant turnaround from 3.88 just a week or so ago. So it's been turned on its heels. He's saying, Bessent's very sanguine about it. He smiles his way through it, but it's hurting, and this volatility is hurting many people. So sterling over a key area as well, 132. Again, another one. We were last at 132 back in October, and the peak of that move took us to beyond 134 to 134.20. So that's the next upside target. Obviously, this move down was very aggressive. The move back up is quite aggressive as well. So it's very spiky V-shape move. So be careful how long this is going to run. But at the moment, it's still running. If you were trailing this, you'd have your stop loss around about there, or I guess just above the here. But that's still running sterling to the upside. MACD nice and positive. RSI on the 14 period, looking to touch overbought zone. But 132 again, a bit like the 200-day moving averages on the Kiwi. It was a significant break and breach of the 132 round number yesterday. So although it wasn't a big bodied candle, we'd had 3 big bodied candles following the momentum. We are still pushing higher. Obviously, UK's had some good data as well today, which has helped. So 132.60 is where cable trades at the moment. Let's just go through some of the others. I missed out crypto, I think, on Monday and yesterday, but crypto had a good bounce back, or Bitcoin, my proxy for all the rest of the crypto market, obviously. Over the weekend, we'd had this break of the 50-day moving average. I forgot to mention it on Monday. We gave it back on Sunday, and on Monday, when the rest of the markets were open, we were back up. But the key thing was the break above the 20-day moving average is now held for 1, 2, 3, 4. 5th day, but it's cooled quite significantly, hasn't it? Yesterday we got as high as 86,400 before we ended down on the day, and we're down again today. But so this the bounce we've seen from the lows of the 76, 75 zone. It seems to be struggling with the it is struggling with the 50-day moving average. So that's very much in play, my friends. So big up, cooling, and now we're into this congestion zone. So a holding of the 20-day. You see this here, this compression here. You get compression, it's like any pressure builds up. It's got to break somewhere. It's either going to break to the downside and retest the lows again, or it's going to break away from this compression area and test the 200-day moving average, which sits there at 87,700. So the bulls will look for a break of this zone here, this 4 or 5 day zone we've been in here, to take us to 87,700. The bears will look for a break of the 21 EMA here at 83,300 to take us back down to retest the 76.75 zone for crypto traders. Indicates here the MACD is not telling me very much. We're in consolidation mode, flat. The RSI not telling me very much, rotating through 50, which is neutral zone. So not a lot going on. It's looking for another stimulus. But so this continuation, this compression, this sideways action could continue for a while. And other than the move lower, the crypto strategic reserve thing not happening, this spike, you take that out, take that extreme out, you can see we've really been sort of through here since early March, haven't we? Through this sort of zone of 84, 85 zone here during well, even going back to the end of February, so all of March. So if that's our extreme down, that's our extreme high back into the 92 zone. Excuse me, we've really just been going sideways for well over a month now on the crypto. So short term, as I say, the 200-day is the resistance at 87,700, and closer to home, the 20-day moving average at 83. 400 and the 50-day at 84,200. That's the, you can see how they're compressing. So the break of either of those will take us either up here or down here. Who knows? Who cares? You want, it is what it is. Don't get attached to it emotionally. If you're trading it, obviously, if you're holding Bitcoin, you're holding cryptos, you're obviously hoping it's not for traders. It is for holders that the price rises. So anyway, sorry, I missed crypto in the analysis over the last couple of days. Oil, next market's down. Oil, again, still looks relatively weak to me. We're at 62 today, US oil, $62. There's that big leg from the peak we got to at the beginning of the month. And all the way down to $55. Yeah, if you bought at 55, well done. Some did, obviously. But since then, we've rallied, but we're stuck at the key 38.2 fib level, which sits at this $62 level, and we have been can't break away from there for the last. We had an immediate bounce back here on that first big up day here. So 1, 2, 3, 4, 5 into our 6-day, rotating steady at $62 at the 38 fib. Next upside target would be the 50 fib at 63.85, and then the there's a bit more resistance up there, but then would be the 20-day moving average at 64.50, and then the 61.8 fib at 65.80. So 3 upside targets if we break away from this 38 fib level here at 62. If this doesn't break to the upside, we move back down. So put a little trend line on there, however you want to draw it, to hold. We move back to the 58 and the 55 level potentially. Obviously, the pressure has been Saudi talking about OPEC will produce, or Saudi will produce more. They've cut prices to many Asian customers to keep market share. Where we go from here, the dynamic of Iran to Venezuela to Libya. I mean, all of those things are still in play. Russian oil getting on the market still. Obviously progress in any of the negotiations, whether it's Gaza and Israel, Ukraine and Russia will have a significant movement in the oil market, but certainly the tariff restrictions is expecting to dampen global demand for oil if this starts to feed through to higher inflation. Obviously, a lower oil price generally will ease prices globally, but we'll see. So down for good reasons and down for bad reasons as well, the oil market. Indices. Let's have a look at let's have a look at gold, because again this morning we had a new all-time high again this morning at 3,317. So the 3,300 level was breached this morning on the gold market. It doesn't seem to stall anywhere. This is the hourly chart. It's got the 4-hour chart. You see, it's very, very big. Trying to catch this or short the top is, a fool's game, really. I mean, classic little move this morning. It was really nice move here on the hourly chart. If I do that a bit more, you could see, we'd moved up here from the 9th low down here, so we went under 3,000, continued to move up, and then from the 11th onwards, 11th Friday, Monday, we've just been going sideways, really, sort of not a lot of action as it rotated around the 20 and the 50-day moving average. But the key move was this morning here, or last night, as we broke above this sort of resistance zone here. We'd seen it 32.42, so we didn't want to get down under 32,000. That was providing nice big support. 32,100, I should say, 3,200, and the resistance level was broken this morning as we went through 32.40, and then we just ran away and very quickly got to 3,300, 3,300, and then plotted a new all-time high at on the opening of some of the European trades this morning. And we've just done it again now with the US markets open, and we've just gone above that 33.17 level. So gold at all-time highs. What does that tell you? Well, it tells you that people are buying it in droves. All sorts of institutions, from hedge funds to countries to sovereign wealth funds to insurance portfolio, all sorts of portfolios looking to hedge the uncertainty, the weakness of the dollar, get to the traditional safe haven that is gold, given that US treasuries are not proving to be the safe haven they normally are. That's why we've got a strong Swiss franc, an improving yen, and gold just continues to outperform. If you look at other metals, copper, and an industrial metal, we look at the daily time frame on that one, hit quite significantly, but again coming back, but not, nowhere near all-time highs that we've seen for gold. That was copper reached its zenith here at the end of March, so that's recent zenith at the end of March, sort of double top from the May last year as well. So copper very much under pressure. Silver more in line with copper than gold as well. So there's that October to March sort of double top area, back to this 30 level where we saw some significant buyers, and we're back to 32.75 at the moment. So another move up. That's like a good day today for silver as well, actually, over its 50-day moving out. It'll be an interesting one to have a look at later on. I'm not actually trading silver actively at the moment, but silver up, but gold is the daddy of the metals at the moment. New all-time high seems to be every other day at the moment, and again, technically, this is very positive here on the MACD histogram. The MACD signal line still very positive, bit stretched there, and that's not to be expected, not to be not a surprise given the all-time high, and also the overboughtness of the RSI indicator. But we have been higher. We've got as high as 77.44. We're currently at 73.35. So don't just try and short it because it's overbought. 79. When was this one? This was 78.50 when the price got to it was still shy of where's that price now? That was, when was that? That's, still shy of $3,000. So yeah, and even higher here. RSI reading 81.5 when we were in September, when we were, where was this price? This is all the way down at 2665. So don't don't just read one indicator. Don't make a decision just on one indicator. So gold remains bid. Be careful shorting it. The 20-day moving average now sits at 3,110. Lovely aligned moving averages. It's moving up. Indices, we got our recent trades got closed out flat the second half for the Dow this morning. We'd moved our, as we said yesterday, we hit our first target yesterday. We'd moved our stop loss up to entry, and it's reversed back to take us out flat. So we got a winning half a trade, if you like, on the Dow. Similarly on the S&P 500. Hit its target, come back, and it's actually gone a bit lower than that. But then you see, still looks pretty weak. The 50 to 200 day is up here. The 50-day is here. We've had the announcement. The death cross on the S&P 500 has been in the news this week. but is the low in? Trump tariff lows are marked here, 4,800, went under 5,000. So clearly, buys at 5,000 on the S&P 500. Is it going to get tested again as we come into April and May? Remember, May is that traditional month, sell in May and go away. November to April is the key 6 months of stock market growth historically. So things start to cool down in May, volume wise. But we still got a hefty chunk of obviously the earnings season to get through as well first. But everything is really all rotating around the tariffs. So 5,000 remains a big buying area. Are we going to test it again? Who knows? But at the moment, we're still shy of the 20-day moving average. Sits at 54.54, interestingly, that famous old New York nightclub, and then the big resistance at 5,700, where the 50-day and the 200-day are sitting. So are we going to go lower on the technical cross of this? But this is so lagging, the low might already be in, or we may have some, further falls to go for stock markets. Still looking pretty bearish to me, or pretty weak to me. The signs that the capitulation is in, but we perhaps need to test it down again, because we moved down quite aggressively over 3 days, but we bounced back in 1 day. So everybody's sort of keeping their powder dry, perhaps, since the big recall here on the 9th, ahead of the weekend last week. But again, it was a massive bounce back, but we were still under the 20-day, and we remain under the 20-day 4 or 5 days later. I'm not sure what that trend line is. Must be on a shorter time frame, I guess. Get rid of it. It looks ridiculous. No, I'm sure it's on there for a reason. So for me, really, I'd like to see a hefty or a break of the that 54.45, 54.50 zone over the 21 EMA before we'd look to perhaps buy that one again. And certainly a break below 5,000 could see a capitulation low coming in, but at the moment it was 4,800 at the moment on this sell of the big break of the rally. But again, another one, as I say, we've got the 200-day on here now. We've been under the 200-day now since the 6th of March, and here we are the 16th of April. So it's a significant move lower under the 200-day moving average as well in the long-term basis. So S&P and all the US markets the same. A bit more exaggeration on the Nasdaq 100. We did break over the 20-day moving average on that bounce on the 9th, only to give it up. But again, you see the consolidation. So a bit more tech-led recovery again, or people feeling that they've missed out. But again, similarly, you see the same pattern. The Trump tariff low, 16,340 here on the 7th, not the 9th, and then the bounce back on the 9th. But again, another one that can't break above its 20-day moving average, which sits at 18,935 today, and a down day currently for the Nasdaq, a down day for the S&P 500, and the Dow similarly a red candle so far, and a down day into the weekend potentially. Tomorrow, I say the next big mover, potential market mover, is going to be the announcement, the press. The press conference from the Bank of Canada, but that's probably just going to add to the hawkishness, I would guess. They're going to stand down, but then really, market is now waiting for Chair Powell ahead of the Thursday's trading, and then no trading on Friday. So tomorrow overnight we got jobs from Australia. We got the EU ECB will cut by 25 basis points. There's still plenty of action on the euro potentially, but they seems pretty clear about what they're doing. The weekly claims as well as normal. So I'll be live for all of that tomorrow, Thursday. See what Mr. Lagarde's got to say, and follow up to what the ECB announcing. Obviously, currently locked away, and obviously, but with half an eye, I'm sure, and half an ear, or probably a full ear, to what Chair Powell has got to say later on. But for me, I'm going to shoot off now and listen to the Bank of Canada press conference. It's going to be a lot more interesting than it normally is, that's for sure. But we'll have a look at that in a minute. So let me just leave you with gold today, another all-time high. Be careful, guys. I say, if you're trying to short this, the momentum is still to the upside. Yes, we're into overbought territory, but strong day. Continues now. So we've had one down hour. That was 10 o'clock this morning. The other one was 3 o'clock this morning. But we remain bid to the upside, having broken this this range here on a short-term basis this morning as the day started. So strong day, new all-time highs, and we've pushed above that 3317 just whilst I've been speaking to you. So new all-time high now is the 15-minute chart. Was in the last 15 minutes. So we're now at 33, just shy of 33.20. Let's make that call it 33.20. We're just shy of that, aren't we? That's the round number that's just shy of, but there we go, in the last 15 minutes. So take care, everyone. I'll see you tomorrow. As I say, if you're not with us, I know there's lots of us, a lot of you joining us on Discord. Do try and open an account. Farouk, here's my trading performance through the use of my profitable tower. Farouk, very good for you, my friend. And Manish asking for a discount code, new 25. So Manish, hope you've opened an account. Very, very straightforward. The evaluation trades, the either one step or two step to becoming a funded trader. Standard is the two step. If you want to go the express channel, I normally show the two step, but let's have a look at the one step. You've got a higher profit, you've got a higher target to get to, and the losses are a bit tighter. But if you want to do it, you're in a rush, you think you're an experienced trader. Profit target is 12%, daily loss drawdowns 4%, 7% the maximum loss. You don't want to be risking more than a couple of percent on your each and individual trade, but it gets you to becoming a funded trader more quickly. Obviously, need to do it at least maybe minimum trading day in 3 days. I mean, you can do it in 1 day as long as you place trades the following 2 days as well, and obviously there's a way around you can do that. But I say our most popular is the 25,000 on the two step. The 50,000 on the one step is for 345. SC25, if you're watching this, SC25 coupon is still live. That gets you an $86 discount, brings it down to $258. You've got $50,000 worth of account to play with, and that's what your funded account would be. So a few percent winning trades on a $50,000 account, that's real money when you're taking 80% of those profits home with you. So give it a go, guys. If you've got an edge, if you've think you can trade. If you're brand new, you haven't got that sort of funds around, start with and you're a bit more patient. Start with a two-step challenge. They start from only $55 or $41.25. 5,000. It's not a massive account, $5,000. As I say, find a few hundred, another $50 takes you to 131 with the 25% discount off a very competitively priced challenge anyway at $175. But that gives you a massive equity of $25,000. So come and join us, guys. We're here to help you and join the Discord group. I post trades, what I'm doing every night here on the Trading Strategies platform. Oh man, I didn't mean to put that in there, but that was news. That should have been in the other channel. But anyway, we've had a bad day so far today on from a points basis. The Nasdaq we took long yesterday. I closed it, missed the gap. Yes, let me show you. Even an old timer like me, old codger like me, makes mistakes. when we trade manually. If you look at the Nasdaq, we went long earlier today. Oh, hang on a minute. On the hourly chart. We were long yesterday evening, and then for some reason I didn't see it. We were still long, but I missed this gap, and so when I woke up at 7 this morning, I checked it at 7 this morning. We'd already moved down. I actually got out. I got filled here at 18,470. Interestingly, we went all the way back up there. Anyway, that's where I got took out. So yeah, points numbers was quite significant. It was a 471 number down. To say the reverse on the Dow and the S&P 500 also took us out, but they were points wise very profitable trades as well. The CAD yen. Also a profitable trade, 24. That has since reversed and taken us out. And the Swiss. The pound Swissy was I closed that on a move down. That was a minus 77. So we're negative for the day at the moment. I think we're negative for the week as well now, given that points numbers. But we are still open on CAD yen's close. I say Swissy. Let me show you this. The Swissy. We showed you that earlier. And the other open trade I have at the moment is the Swiss. No, it's not Swiss at all. It's Kiwi. CAD is the only other open position currently. Kiwi CAD. And in fact, that's since we've been on air, that has stopped out as well. So we reversed this stop loss. But again, we got in all the way down here. So it's been a very profitable trade. That was our first target. And we've trailed our stop loss up to here. So that's closed out as well now. And I'll update the Discord channel in a minute. So take care, everyone. See you tomorrow for the European Central Bank following a very, very hawkish statement from the Bank of Canada. See what the Europeans have got to say tomorrow. I'm really interested to see what the Bank of Canada press conference looks like. So take care. See you tomorrow and trade carefully, everyone. Be good.